Well, morning. Well, behind the radars, there has been a migration of cash in simple terms. At 3.9 billion US dollars have been seen emerging into the 10-year yield bond market, something that has never happened in the last 3 months in the month over year earnings, or let's say the attaining of the bond market in the Japanese economy in simple terms. However, at the same time, at this exact timing, well, we saw yields skyrocketing in the U.S. bond market, in the U.S. bond market in simple terms, because we saw bonds yields going up by almost the 10-year yield went to 4.7.1%, and we saw the 30-year yield going to 5.17, if I'm right. Have to understand one or two things in simple terms. We are heading to a behavior or scenario that I would explain as a scenario where we should say, or we should try to understand that market is shifting. Japan is trying to strain the US economy in one or the other, and it's really indicating real fear in the economy in simple terms. Ask yourself, where did the 3.9 billion US dollars come into the US bond, into the Japanese economy in simple terms, or the bond market, especially the 10-year yield? Well, that all comes to the competition of yields, okay? Because as of today, the Japanese yields are kind of high and well more attractive. Just a brief history. For decades, actually, Japan had zero interest rates. That's why most U.S. bond, most treasuries or most bond hold treasuries of U.S. treasuries have been always Japanese investors in simple terms, because at home Japan never used to give any interest on yields. That's why we had or actually what's known as the carry trade. People used to borrow the yen for almost for zero interest, and in return they had to return with zero interest. However, in the last 2-3 years, the bond market has changed in simple terms. The Japanese initiatives or interest have also changed in one or the other, because for decades they never used to give any interest. So many who I would refer to as the Japanese giants used to keep interest low and make sure that they could not go any other further than that in simple terms. They used to make sure that they keep interest low. Well, they try to suppress their currency so that by then they had what they call a surplus market with the US in simple terms. But as of today, the Japanese economy is kind of crumbling one or the other. It's kind of perishing off. Right now, under the Prime Minister known as Sanai Takashi, sorry if I have to, I'm doing my level best to pronounce that right. She used to try her level best to make sure that she's having I would say, an agenda of bringing the wealth of Japan back to Japan in simple terms. That's why you should try to understand that right now the narrative that's still in place, it makes the US to be in a crumbling position. Quote me right. Like I just said, in the last 2 decades or 3 decades, Japan used to have what's known the carry trade, and they used to keep their interest low in the first place. However, as of today, as I speak, interest rates have been raising one way or the other, and they have been really raising thoroughly, and they are hopefully raising more, because we all know the Japanese currency as of today has been weakened and truly weakened. But we are in an economy where we have wars, we have what we refer to as everybody was asking for dollars maybe to buy gas or gasoline, one or the other. It's running insane one or the other. It's going out of hand in actual sense. But to understand what's taking place, let's try to understand how does this affect America in the first place, and how does it really intend to go further if this continues. Well, in the first place, there's what they call a failed auction. US has failed to auction its debt to the rest of the world. That's why today we are seeing yields raising high to attract investors to be buying them in the first place. We should also try to understand that this indicates one or two things in the first place. It indicates that the US economy is trying its level best to adjust and compete with the yields with the rest of the world. However, Japan is initially initiating it like I really need all my wealth back home. And by the end of this video, I'm going to show you something that's really much, much bigger and much more scary in the first place. Because as of today, actually, by the month of March, China and Japan dropped over 47 billion US dollars of treasuries. If that seems like a small number, it has been happening to all foreign holders. That's why today we have the Genius Act that Trump initiated last year, that we still call genius in quotes, but still has missing quotes in simple terms. We should also try to understand that all these terms mean one or two things in the first place. They mean that there's fear, a big fear for there's lack of trust in the US dollar, because the way how the US prints out all this money and how it allocates its funds one or the other. That maybe they're spending on the war, ABCD. Foreign investors are losing trust in this dollar. The ongoing war in the Middle East is making them maybe to sell off to attain dollars so that they can restrain their economy. The second impact of this happening includes what we'll be referring as the surging yields. Well, whenever the yields raise, consumers in the US are gonna be crumbling one or the other. Well, your mortgage fixed rate, I don't know what they call it, mortgage fixed rate, because it will be crumbling. It will go high. It will go out of understanding. It will run out of, I would say in simple terms, it will run a bit diabolical in simple terms. Try to understand that. You should try to understand that what's taking place is bigger than many of us expect it to be. Because Japan has the last trigger that makes everyone to be shattered in one or the other. And that's known as the 1.8 trillion pension fund. I believe that's the largest fund in the world, actually. That's the 1.8 trillion fund. In simple terms, let me explain. Well, that's the amount of money. Japan had a formula how it invested its money. Actually, it never invested all its money at home. Regardless the weak economy, how you see it in simple terms. They had a behavior where they used to keep, I would say, half of their funds in simple terms, okay? Half of their money to the rest of the economy, the US and involving other countries in simple terms. And that money is almost 930 billion US dollars in actual sense. That money isn't small, that's real money. Imagine if Japan wakes up one early morning and is like, okay, we need all to change off all this money to get out. Because it happened on July 10th, well, Prime Minister Sanai Takashi and his new treasury, I believe he's the Prime Minister and his treasury guy, they went up, I'm sorry, I could not pronounce the name of for the treasury Prime Minister, sorry, for the treasury minister in simple terms. What I'm trying to say in simple terms that they come up with an announcement that the government is taking measures to find ways, okay, to find ways of bringing back the 1.8 trillion dollars of cash back to the economy. Imagine what's going to happen to the rest of the world. Imagine if 1.8 trillion is taken out of the US stock market, in the global markets in simple terms. What does that trigger to the rest of the economy? Where does that leave the US economy in simple terms? Where does that leave the US consumers? Where does it leave your mortgage rates? Where does it leave your credit scores? Where does it leave your everything on that? It might seem like it's less, but that's really more and more. We are heading in terms that are kind of, everyone is trying to create what they call pullbacks in simple terms. Because if you look at all the global market on scale in simple terms, we are looking at the economy that's likely to be heading to a scenario, because right now, interest of Japan is to make sure all its belongings are back at home. They are trying to make sure that they have investments at home, because all what they are trying to pursue, the 1.8 trillion US dollars, is to make sure that they bring it at home, and they just show that by also showing what just happened in the 10-year yield of the Japanese bond. They attained almost 3.9 billion US dollars. That's a lot of money. However, where does that leave the rest of us? I can't tell, regardless. Otherwise, thank you for watching, and if you found this video kind of interesting, please let me know, like and subscribe. We hope for the best. I show up daily for the financial content almost per second. I'll be here. Thank you for watching. See you in the next one.